Treasury Secretary Steve Mnuchin says in a new interview the U.S. will not be intervening in the U.S. dollar right now. He is also looking hard at a potential 100-year bond issuance. Brian Cheung is here now with the latest, 100-year bond issuance?
Well, the idea here is that the current government has a big fiscal deficit, and a good way to plug that would be by issuing a new bond. And we've seen that there's been strong demand for U.S. government bonds over time. I mean, we've seen yields across the board, right? Whether you're looking at the 2-year, whether you're looking at the 10-year. I mean, the yields have come down amid global demand for it, and it's actually inverted the yield curve at some points. We saw the 30-year and the 3-month, two extreme parts of the yield curve, invert briefly yesterday. So what we're seeing is that there's a lot of demand for this, and that maybe if the administration was interested in trying to plug some of its deficits, it could issue this bond. For what's worth, Mnuchin, though, telling Bloomberg that they're not interested in doing that right now, although they are kind of incorporating it as part of a survey to market participants just to see, hey, if there was interest in this, would you kind of...
I'm not interested. I won't be on the planet to cash in. That's just the bottom line. That's the reality of it. But let's go to on the dollar front, too. Now, the president has said he would like the dollar to be weakened.
Yeah, so President Trump has made no secret of the fact that he thinks that the dollar is too strong right now, and that intuitively makes sense because that hurts U.S. exports and makes it more expensive for other countries who don't have U.S. dollars to get the U.S. dollars to buy U.S. goods. The Treasury does have the ability to coordinate with the Federal Reserve, as it has done actually in the past, to basically buy other foreign currencies to weaken the U.S. dollar. Now, it's kind of a lot of moving parts here, but it's part of what they call the Exchange Stabilization Fund. And that's only been done a few times in the past. For what's worth, the reserve is fairly small. It's kind of unsure about to what extent, given the really strong strength that we've seen in the U.S. dollars, you can see through the U.S. dollar index, whether or not that would actually do something. But the Treasury says for right now, they're not interested in doing that.
This dollar strength is somewhat bizarre. We have weakening growth. That GDP print wasn't exactly hot, and you have the Fed lowering rates.
Yeah, there's a lot of moving parts here. But for what it's worth, it would be fairly unprecedented for this kind of change to happen, or for the Treasury to try to coordinate with the Federal Reserve to kind of make this change here. Again, they would like to coordinate with the Fed, and as we've seen with the Fed, they're not really interested in trying to fuel President Trump's trade war.
Especially off that Dudley op-ed earlier in the week.
Right, spicy.